Welcome back to Trading Club 7U. So today, we've covered some fundamental concepts about how financial markets work and the importance of understanding these concepts to succeed in trading. Let me ask you a question. Have you ever seen a chart that looked like this and thought to yourself, what is going on with this market? This kind of chart is often associated with a market trend that changes suddenly. But if we break down the chart to its simplest form, we see that the market is essentially influenced by just a few factors like supply and demand. And that's what we're going to cover now. Imagine being at a market where vendors are selling fresh fruits, and you notice that there are a lot of people buying bananas. The price of bananas tends to rise, right? If there are fewer bananas available due to a shortage somewhere in the region, then the price might rise even more. This is essentially what happens in a financial market, where the price moves based on the equilibrium between buying and selling actions of the traders. So let's go back to that example of the 4 people buying and selling apples. You have John, who's a seller, offering 10 apples for 1 each, but Sarah, the buyer, only wants to buy 5 apples for the same price. Now, here's the point: the price of apples is not fixed, it's based on the market forces. If more people want to buy more apples than there are, the price tends to rise, since there's a competition among buyers. On the other hand, if more apples are available than buyers, the price falls. And that's what we mean when we talk about supply and demand in the market. Now, let's discuss some common beginner mistakes that you should avoid when trading. One of the most common mistakes is to ignore fundamental analysis. This could be due to various factors, including the influence of friends or family members who might give you biased advice, or your emotional reaction to the price movement of a stock. For instance, if you have a friend who's enthusiastic about a particular stock, and they convince you to buy it, that's exactly the kind of bias you should avoid. Trading should be based on the price action and fundamental analysis, not just on emotions or social influence. Another common mistake beginners make is over-leveraging. If you borrow a large amount to buy a stock, and the price drops significantly, you might end up losing more than your initial investment. Now that you have a solid understanding of how markets work, let's dive into a real-world example. Imagine you're buying a toy for 20 and then selling it for 25. You made a 5 profit on that transaction, but here's the key thing: you also made a 25 return on investment. Now for the practical part of this lesson, I want you to imagine a real situation where you want to buy a stock. Which stock do you want to buy, and what's your reason for buying it? Take note of your reasoning. Next, I want you to identify your risk-reward parameters. How much capital are you willing to risk versus the potential return you're looking for? Lastly, on a piece of paper or a note on your phone, document the following information about your stock selection: the symbol of the stock, the reason for your purchase, your risk-reward parameters, and some fundamental analysis. Some of the fundamental analysis that you might consider when selecting stocks include the company's earnings per share, revenue growth, return on equity, and debt-to-equity ratio. But I want to emphasize that trading carries risks, so I want to make it clear to you there are no guaranteed profits in trading. It's always best to practice in a demo environment or use paper trading before risking your capital. Alright, that's it for today's lesson. Let's recap what covered so far. We discussed the fundamental concepts of markets, how supply and demand influence price action, and why fundamental analysis is critical to understanding price movements. The home workout that you tried today is a critical step in developing your trading skills. And remember, it's just the beginning of a long journey in trading, so keep practicing and learning, and don't forget to subscribe to our channel for the next lesson, where we'll be discussing trading instruments like stocks, forex, and commodities.